I wanted to start by asking you about your journey since listing. It's been a volatile listing, or there was a phase of volatility post-listing. Things have settled down, the stock prices actually turned around quite a bit. Can you just reflect back onto the journey of the past year and a half?
So obviously we knew when we were listing that we were not part of the index funds anymore. And the index funds had to exit the moment we listed. And so that led to a phase of volatility as, index funds were listing, domestic funds didn't know us. And so we had to educate the market. So I think we've spent the last year actually doing a turnaround both in the underlying business. We did a rights issue, which actually reduced debt. And we then focused on educating investors and kind of saying this is our business, because we're a little bit of a different business to most pharmaceutical companies. Because if you think about it, our major business is contract manufacturing, where we make drugs for other people. Hospital generics, which is a little different again than branded generics. And then we have a over-the-counter drugs portfolio. So it's a little bit different to others, and so we had to actually educate people and say, look, this is how we work, this is kind of how the business is. We've got 17 manufacturing sites that are spread across the UK, the US, Canada, as well as India. So we're just a little bit of a difference.
Okay, well, I'm going to get to, discussing the verticals in just a bit, but you raised around 1,050 crores via rights issue successfully. How much of that was used to pay off debt?
The majority of it was used to pay off debt. We actually reduced our debt to equity to about 3.1 at the last quarter. And the plan is that we want to keep it, below 3 for this end of this financial year. And then beyond that, we'll see.
So what is the gross debt on books right now?
It's about 4,000 crores.
Okay, so what would be an ideal figure?
I think we'd like to, as I said, right now the aim is to get to below 3. And next year we'll talk more about it.
Okay, all right. In terms of the debt reduction, do you think that having this kind of debt on your books is probably going to constrain you in terms of growth?
I think we've done a fair amount of debt reduction. I think we're reasonably comfortable with keeping it below 3. And I think as we think the business improves, you'll see organic growth in revenue and EBITDA will mean that the ratios are actually quite comfortable.
And below 3 would be a target by when?
We're aiming to be between the end of this financial year.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.